Hello, friends. Today, I want to ask you a very interesting question. Have you ever wondered what actually happens after you submit your loan application to a bank? You complete the form. You submit your documents. You walk out of the bank and go home. But that is exactly when the real journey of your file begins. On one side, there is your dream. On the other side, there is the bank's trust. Today's video will help you understand how banks approve loans, what a credit officer thinks, what a bank manager checks, and why some loan applications get approved quickly while others remain stuck for months. Friends, after watching this video, you will never look at a bank in the same way again. Because today, we are going to sit in the chair of a bank manager and see the world from the bank's perspective. Let me start with a story. This is the story of Mahesh. Mahesh was a young man from a small town. His dream was to start a food processing unit. One day, he heard that the government provides subsidy support for food processing businesses. Excited by the opportunity, he prepared a project report, collected documents, and applied for a loan. Mahesh was confident. He believed his loan would be approved very soon, but 30 days passed, no response. 45 days passed. The bank asked for additional documents. After 60 days, objections were raised. Mahesh became frustrated. He said, "The bank does not want to give me a loan. The government scheme is only on paper." But was that really the truth? Let's walk inside the bank and see what actually happened. The day Mahesh's file reached the credit officer's desk, the officer opened the file and asked the first question, "Who is Mahesh?" Notice something important. The officer did not ask how much subsidy is available, how much loan is required. The first question was, who is the entrepreneur? Because before evaluating the business, the bank evaluates the person. The bank wants to know, what is his background? What is his education? What is his experience? Does he understand the business? Can he handle challenges? Can he run the business successfully? Friends, banks do not invest in projects alone. Banks invest in people. The second question the credit officer asked was, is this business viable? Is there market demand? Who are the customers? How strong is the competition? How will revenue be generated? Can this business survive and grow? Remember this carefully. The bank does not finance subsidy. The bank finances business. If the business is strong, the bank's confidence increases. Next comes project costing. The credit officer checks, is the machinery cost realistic? Is the building cost reasonable? Is working capital sufficient? Are the quotations genuine? Many entrepreneurs download random quotations from the internet without proper verification. The bank can immediately identify whether proper preparation has been done. Now we come to the most important topic, repayment capacity. Let me ask you a simple question. If one of your friends asks you for 5 lakh rupees, what would be your first question? You would probably ask, how will you return the money? Exactly. That is the same question the bank asks. How will the loan be repaid? How will the monthly EMI be paid? What income will the business generate? How much profit will remain after expenses? What will the cash flow look like? Repayment capacity is one of the most important factors in loan assessment. After the credit officer completes the analysis, the file reaches the bank manager. The bank manager looks beyond numbers. The manager looks at the entrepreneur. The manager asks, is this entrepreneur serious? Has proper preparation been done? Does this person understand the business? Will this person continue even during difficult times? Many times, 2 entrepreneurs come to the bank with very similar projects, the same investment, the same business, the same subsidy opportunity. But one entrepreneur explains the project confidently. The other entrepreneur is confused and unable to answer basic questions. Who do you think the bank will trust? The bank does not finance documents alone. The bank finances confidence. At Loan Doctor, we have analyzed thousands of loan applications, and we discovered something very important. Most weak applications have one common problem. The entrepreneur does not understand how the bank thinks. That is why we created the Loan Doctor Banking Framework. We call it the 5C framework. C1, character. The bank asks, can this person be trusted? What is the entrepreneur's reputation? How does the entrepreneur behave? Does the entrepreneur appear honest and responsible? C2, capacity. Can the business generate enough income to repay the loan? Is the business model strong? Will there be sufficient cash flow? C3, capital. How much is the entrepreneur investing personally? Is the entrepreneur sharing the risk, or is the entrepreneur expecting the bank to fund everything? C4, conditions. What are the market conditions? Is there demand? Is the industry growing? Is the location suitable? Can the business survive competition? C5, commitment. Is the entrepreneur truly committed? Has market research been completed? Has a proper business plan been prepared? Are the documents ready? Has serious effort been made? Now think about this. If you were the bank manager and Mahesh's file was sitting in front of you, would you immediately approve 20 lakh rupees? Or would you first try to build confidence in the proposal? That is why Loan Doctor believes banks do not approve loans. Banks approve confidence. The higher the confidence, the higher the chances of approval. This is exactly why Loan Doctor created the Loan Doctor Readiness Index, or LDRI, because we realized that the real problem is not the loan. The real problem is readiness. When readiness improves, confidence improves. When confidence improves, the chances of approval improve. When readiness is weak, objections increase, delays increase, and sometimes applications fail. Now here is a simple exercise for you. Tonight, spend 10 minutes acting as your own bank manager. Look at your business idea and ask yourself these 5 questions. Would I approve a loan to myself? Can my business generate enough profit? Am I investing my own money? Is there genuine market demand? Am I fully prepared? Your honest answers will reveal where you need improvement. Friends, always remember this. The bank is not your enemy. The bank is your future business partner. But every partnership is built on trust, and trust is built through preparation. That is why successful entrepreneurs do not ask, will the bank approve my loan? Instead, they ask, what can I do to make my project stronger and more trustworthy? That simple change in thinking can transform your journey. I am Prakash Rathod, and this is Loan Doctor Academy. In our next episode, we will discuss what makes a successful entrepreneur. Until then, keep learning, keep preparing, and always remember, banks do not give money first. Banks give trust first, and trust must be earned. Thank you.